So why did Tesla's share price fall 6%, probably down more than that in the pre-market when it trades today? Why did it fall 6% when it doubled its profits? And it's essentially revenue keeps going up, the company's opening more factories, Elon Musk tells everyone it's going to grow its sales by 50%. Why would the market sell it off if it's making more money? Well, the reason is because Tesla's current price to earnings valuation is 75, a multiple of 75, which means if you were buying a business privately, you'd probably pay 3 to 5 times earnings, maybe max 8 or 9, 10 if it was an incredible business. But if you were buying Tesla outright, right now you'd need about $690 odd billion. If Tesla didn't improve its profit, it just kept making cars at the same profit it is today, it would take 75 years based on the profit today for you to get your money back. Have a think about that. Even if Tesla was to improve its profit 5-fold, it would still take 15 years for you to get your money back. So bottom line, I think Tesla's overpriced. I think even with a share prices down 40% in 2022, great company, great car, it's making money, all of those things. It's not Tesla's fault that it's overpriced. But automotive industries and the airline industry has been a very terrible investment for people over a long period of time. And I can tell you now, all of the people that jumped into Tesla, well, many of them were crypto lovers, Elon Musk followers, millennials, people that were stuck at home, stayed home, worked from home through the COVID pandemic. They're bust. They're gone. They're not in the game any longer. A lot of them. They're back at work and they're not supporting the stock like they were before. Now, no question there's a lot of investors out there prepared to buy it and own it and keep it and all those sorts of things. But if you bought it 5 years ago, you've done incredibly well, up about 800%. But if you're buying it now or bought it in the last 12 months, you've really got to question the valuation of the business. I mean, Tesla makes less than 2% of the world's cars. 80 million cars are produced around the world, but the market is pricing Tesla at a valuation combined of every other car manufacturer in the world. Are you telling me that Tesla is worth more than Ford, GM, Toyota, Porsche, BMW, Mercedes, Bentley, Rolls-Royce, Aston Martin, all of them around the world combined, Hyundai? Are you telling me that it's worth more than Berkshire Hathaway? Because the market is telling me that today. There's no way it is. Not in a million years is it worth that. But people are prepared to buy it. And that's an interesting thing about the share market. In an auction-driven market, people will pay crazy valuations for things. Now, there's some other businesses like Amazon that also has very high PE ratios. But we're talking about a business that has some serious runs on the board with respect to the cash that it generates and the economic moat that it has. And we'll maybe talk about that in another video. But when you look at a business, I want you to think about one thing. Think about if you had all the money in the world, would you buy that business today? Would you seriously pay $690 odd billion for a business that is barely making a few $1 billion of profit? Less than 1 million cars, less than 2% of the global car market, and you would pay a valuation greater than every other car manufacturer around the world? You'd be crazy if you did that. And if you can't get your mind around that and you wouldn't do that, then don't buy one share of a company. Don't buy one share. So it's very helpful to look at your investments that way. If I had all the money in the world, would I want to own this business? Is the price that it's trading at fair? It's a really important fact. Hope you have a great day. See you tomorrow.